Okay, we are 3 minutes over, and it's a good evening, good day to you wherever you are in the world, and thank you very much for joining us. I must say we were very surprised to have 156 people registered for this webinar, as normally this type of tax webinar is very unexciting, and so we get a very small turnout. So it's really fantastic to have so many people online. I think we're sitting at 57 already, and so, yeah, great of you to give up your day, your afternoon, or your evening, wherever you are, to join us. We've got a great panel today, and I think the intention was we get a number of questions from people that are very good questions, and we felt it would be a good idea to bring on the experts and let them answer the questions, especially for you. So let's get straight into it. We've got a long itinerary, and we want to get to the Q&A as quickly as possible. We'll start off, of course, with Louw Viljoen and Jakes, who will give us a brief presentation that will answer a lot of your questions. And then we'll move to our panelists who can answer your questions directly. As I've mentioned, we've got a lot of questions from the floor already, and I think we'll cover most of what you've got to ask and what you need to know in those questions. So without further ado, I would just like to welcome our guests. And as I mentioned, we've got from OrbVest, Louw, our CFO, who many of you would have engaged with and know already, seeing as predominantly we are existing investors on the call tonight, and Jakes, who is our head of legal and compliance at OrbVest. All the way from Florida, Todd Baldwin. Many of you who have LLCs would have been dealing with Todd. He looks after almost all of our LLC clients in the USA. And so we're very pleased to have him online. Of course, our partner at our auditor, PKF South Africa, great for you to join us, Haniko. And of course, last but not least, from PKF Capital in the Seychelles, Justin Porteous. Guys, again, thanks for joining us. So, yeah, as I mentioned, this is not the most exciting webinar you're ever going to come to. So you'll have a lot of acronyms that you'll have to read through. So before I hand over to Louw, please charge your coffee with a very stiff one. And I think it might be a good idea to give you some idea of what actually happens behind the scenes. You know, we so often see the marketing side of these various products that we bring to the market. But I think what you don't realize is that, you know, sitting behind the scenes are 3 chartered accountants under Louw. And of course, they look after in excess of 100 companies now. And included in those companies are 22 odd listed companies, which require audits every 6 months. And so there's a massive amount of work that goes on behind the scenes. I think also you've got to consider that we used to do 4 deals a year and everyone was very busy. And now we're doing a deal a month. And so you can understand the amount of workload, for example, that someone like Jakes would have to do, considering that he has to put in offers on multiple buildings. Not many of them we managed to pull off. He's involved in all the negotiations and all the contracts. And then on top of that, he has to worry about all the compliance, the FSCA compliance, and of course the listing requirements. So there's a significant amount that happens behind the scenes. Great. Without further ado, Louw, welcome, and you're off.
Yeah, thank you, Justin. Thank you, everybody, for joining. I think the first thing which I just wanted to do was just to run through the company structure that you see on every listing that we do, just to give you a bit of background. And I think that will assist you or help you in why do you need to pay tax, where do you need to pay tax, and obviously also the reasoning why we're doing certain things in a certain manner. As you can see, I think the first thing that we always think there's a disconnect is between the accountants and auditors and the salespeople. And like all investors, they want to just invest as easy as possible and get good returns. And then obviously the big question is, do they really need to pay tax for this investment? And how can they minimize the taxation of it? So when any marketer comes to you and asks you for a product, you obviously at a point, the accountants and the attorneys get involved. And you'll see, obviously, we'll complicate everything as far as we can. But it's usually for a reason. And I think the reason, if you can go into what do we actually do, is we will complicate it. But it is to make certain that you as an investor are not 100% secured, nothing's 100% secured, but that we cover all the bases as far as possible and to mitigate risk. So the accountant's version of how we invest in OrbVest, or how do you invest in OrbVest, you can see I put down a lot of acronyms there. That's the easy part. So it is, if you just read the first couple of sentences, it becomes complicated. It is not as easy. There's a lot of pitfalls that we need to be mindful of. We're moving cash around the world. In South Africa, we've got loop structures. We've got reserve bank. Looking after us in America. The SEC, FINRA, which is governing, so we're dealing with those questions, requests.
Louw, your internet is very poor. Can you change internet providers? Do you want us to jump over to Jake's?
Yeah, so should not be an issue. Okay, you can go over. I'll try and switch from
I can actually hear you.
Yeah, we can hear you.
Yeah, I'm also good. I think yours is the issue, Justin.
Okay, great. Carry on.
I will play back with from Justin.
Carry on, Louw, sorry.
And lastly, what I mentioned there at the bottom is always put a T's and C's applies, and don't forget the fine print, because that's what it's all about. We need to cover ourselves. But going into the next, why are we doing it? And the best is giving you some background. So why are we doing this, the structure? Why are we investing via the Seychelles? Firstly is we need to ensure capital preservation and ultimately risk mitigation. We try not to cross-collateralize any assets. So you'll see when you do a listing on the Seychelles, each one is separate. And when Justin mentioned we've got 100 companies, in each listing that we do, it's a separate company right from the top to the bottom that's investing in that asset. So there's no cross-collateral from a company perspective. Having different companies in each structure, from an LLC, which is a limited liability company, again, is there to protect us as investors and to the people that stand surety behind it. So that's one aspect. And then from a listed company, how do we, and that's why Heniku is one of our auditors, how do we report back to our investors, and how do we make sure that our financials are in order? Ultimately, the structures are there put in place to ensure maximum returns, which makes it complicated. And from a taxation perspective, moving cash out of a country usually attracts taxation. And that is, again, with Todd's help, how do you mitigate or how do you minimize the tax that we need to pay? One of the more important things is third-party oversight. Bank accounts, the cash doesn't go into our bank. It goes straight into our broker account. The broker manages the cash flow from an investment perspective. It gets transferred into our attorney's account in the US, and then it goes over to the owner of the building where we buy it from in his title deed company. And again, oversight from auditors. Cost effectiveness is the question on the Seychelles or any other jurisdiction. Ultimately, the more cost we pay on a structure, the less return you as an investor get. One other big issue that we have is speed to market. Obviously, when we get a deal, we need to go and sign a TSA as quickly as possible, but we also need to be able to raise that capital as quickly as possible. So speed to market from a jurisdiction perspective is ultimately important. And it all culminates in a regulated structure that allows us to sell the MLBs around the world. So going that, I'm just going to run quickly through the structures. And this is, again, the structures I've used Medical 33, the latest company, as an example. And again, you'll see it in the property supplement. So the reason that we have the West Orange LLC, that is a company that effectively owns the building, that stands in for the loan, and the company that the bank looks after. Obviously, from a simplistic perspective, if we could have invested directly into that company, it would have been great. However, as soon as there's a change in shareholding, the banks look at the loan, and again, they reevaluate the loan. So we've got problems there. It's also, from an anti-bankruptcy perspective, there's no fallback onto the shareholders. And from a Delaware perspective, the reason why we're doing it in Delaware is, again, there's no state taxes there. So that's very important. The next company that we do have on top of that, that is now what we call it, your Holdings LLC. And that is effectively where everything, where all the decisions are made, and where our partner that we have in the USA comes into play. So when a bank looks at the property company, he only looks at one shareholder, being West Orange, and there's no shareholding change according to the bank. This company is where the property management sits, and where we as partners contribute, and where all the investors' funds are ultimately paid into. Again, what we try to achieve is have the bank one step away from where there's always shareholding, and this is the entity that we finally do the profit splits. So from a cash flow perspective, an LLC is a flow-through principle. So if we make, argument's sake, $100,000 profit in the LLC, there's no taxes payable in the West Orange Property Company LLC. It goes directly to the next company, and from there it gets distributed. The next one, and again, another company in the US. Why? Well, what I mentioned to you is, obviously, we don't want to show the shareholders' changes. And this specific company is made for US investors and to allow US investors investing into the LLC. And that's where we do our filings. Obviously, not a lot of other reasons. The last one in the US is the Inc., and that's where we pay the final taxes in the company. So if you as an investor look at your taxes, and a lot of you ask for, where do I pay taxes? We as a company, and I'm not talking specifically about the investors in the Seychelles, we pay the taxes in the US. You as an investor in the Seychelles, you get a dividend that's already been accounted for after tax. Obviously, you still need to pay your own taxes in your personal name or in your structure name going forward. So again, why are we doing all this? And I think if you read through how do you raise capital around the world, there's a lot of legislation that we need to adhere to. And the easiest way is a listed environment that's under control of our broker sponsor and MERJ. And that allows us to sell listed securities. Ultimately, you're buying a share. In the simplest manner, you're buying a share, and that company owns a property right at the bottom. How we do it, I think you all have been accustomed to our property supplement that you need to read. The advantage that we have with the Seychelles, we've got a multi-issuer program, which allows us to issue this property supplement very quickly. And for you as an investor, the income that you receive during deal is treated as, and again, I'm talking about from a Seychelles perspective, it's treated as a foreign dividend, and we will go a bit more into detail. Even if we sell it, it's treated as a foreign dividend. So there's no capital gain. The initial dollar share that you pay for instance, if you pay 100,000 Rand or $100,000, you'll get the 100,000 back as a capital or liquidation dividend. And anything on top of that will be just a foreign dividend. So no capital gain payable on you as an investor. The last thing which I want to touch based on is just the differences between the Seychelles and the USA, and I think we're going to deal with that in more detail through Jake's. But in essence, if you have an investment in the Seychelles, there's no tax in the Seychelles. Also, if you invest by the USA, you need to take into account the withholding tax component. There's always withholding tax once you've made investments, and you need to extrapolate that cash, and it can go up to 30%. From a inheritance tax perspective, we've spoken about is the inheritance tax in the Seychelles? No, there is no tax in the Seychelles. If you look at other countries, each country has its own tax or inheritance tax legislation. And specifically the US and the UK, there's a CITES tax. And if we talk about the US for now, it's $40,000, 40% with a 60,000 threshold. So anything above 60,000, you'll be paying CITES tax. From a cost of investment perspective, signing up on the platform is for free, obviously, and there's no further cost. Yes, there is cost in moving funds and buying and selling of shares, but if you stay in investment, there is no further cost. From a USA perspective, again, obviously, you need to have some structures in place, and you always need to take into account your accounting and legal fees. How do you treat those incomes? And this is where the big difference comes in. Firstly, going to talk to you about the Seychelles. It's a foreign dividend that needs to be, and I'm talking now South African investors, but in general, you need to declare a dividend. You're taxed on your worldwide income. And as a South African investor, you need to add that foreign dividend, and it's taxed at a maximum rate of 20%. That is on your marginal rate. So if you are going to say, or at the top rate, as an investor, you'll pay 20%. If you add a low rate, that will be adjusted accordingly. If you invest via the US or directly in the US via an LLC, you need to take into account the different tax treatments between the US and South Africa. There is a GTA tax treatment in place, a double tax treatment in place, but you need to be mindful of there is some tax pitfalls. You might not be paying tax in the USA for the first couple of years, but the treatment in South Africa is different, and it's mainly due to the accelerated depreciation charges that they have in the US. So be mindful of where you invest. There's advantages, obviously. If you want to build a balance sheet in the US, then this is definitely the way to go. If it's just pure investment purposes, then the Seychelles is a much easier option. Bank accounts, as you all know, investing by the Seychelles, we've got a broker account. You don't need a physical bank account, versus if you go into a jurisdiction and you want to have an investment there, and everybody knows the kind of complications in opening up a bank account, even in your own country. It's bound with pitfalls. And then lastly, compliance. Justin Porteous will talk about more about compliance, but I think that's one of the biggest stumbling blocks and entry levels or entry to market is there's a lot of paperwork that needs to be done for you as an investor to get involved. But it's not just Seychelles, it's around the world. And the ultimate aim from the Seychelles is to be a white label country, but that means they need to comply. And hence all the paperwork that we need to do, submit to them. I think, Justin, that's all from my side for now. I think if there's questions, we can deal with it a bit later.
Thanks very much, Louw. I think it was great. Jakes, if you want to take us through estate planning, I think this has been a big hot subject recently, and I think it was really triggered by an article that Justin Porteous wrote on our website, and we distributed on a newsletter. So perhaps you can clarify, Jakes.
So maybe it's then good for Justin to go with it. But yeah, so thank you, and good evening, and thank you for giving me the opportunity to speak to you all. I'm just going to talk briefly about financial planning, estate planning, and then some just comments with regards to wills and estates. So first of all, if we then just talk about financial planning, Justin, if you don't mind, you can proceed. You can scroll, it's fine. The basis is that you need to have a proper financial plan. So whether you do it through your IFA or your CFP or your accountant or your lawyer, you need to have somebody that you trust and would be able to give you a proper financial plan. So the financial plan, you will need to be able to, or he or she that will assist you, need to gather the necessary information. And based on your own requirements, a plan must be prepared, and that plan eventually needs to be implemented, and you will monitor that as you go along. And the other considerations that one also need to take into account in this regard is whether you actually want to make use of an investment vehicle. Again, Justin Porteous, that's on the call, can assist and help you with that. The issues regarding whether one should have an offshore trust or an offshore company, considerations in this regard obviously relates to the costs for setting it up, the cost of maintaining that, and then also the tax implications of having an offshore structure. But the other consideration that one obviously need to take into account is the perpetual succession of that entity vis-a-vis the holdings of that investment or the asset via your own personal interest, as I said, or your personal capacity. Because in the case of you passing away, then it forms an asset in your estate, and therefore the whole discussion about the wills, and I will just deal with that later on again. But whereas if you have let's say a financial investment vehicle, then it's a different scenario. So just be mindful of that. So when it comes to estate planning, guys, ladies and gentlemen, I picked up this, it actually goes back, way back, that Benjamin Franklin said the one thing that is certain is death and taxes. And that's pretty much the conversation we are having again tonight. So from an estate planning, why do we have estate planning? Is that you need to make sure that by having a proper will and having part of your financial plan also an estate plan, is that you will be able to look after your loved ones, and also to make sure that they are cared for. You've worked probably your whole life, you've built up a big estate, you were able to make some investments, and you don't want to be in a situation where you can't really deal with that, or that it is for the benefit of your family or your loved ones. As I said, why is it necessary? I think there's two things. One is liquidity for your estate, because remember, there's taxes payable in your estate, but also for your loved ones. If you passes away on a young age, you need to make sure, or hopefully you do make sure that there is some funds that's available for your family, for them, especially your children, if they still want to maybe go to university or have a further requirements from a financial point of view, that it's been taken care of. So the question then is, when do one begin? I think it's, again, based on your own situation, the day you start working, the day when you get married, when you start building wealth, when you're getting your children. All of that is trigger events or events when you actually should be reviewing this as part of your total financial planning. And again, as I said, the considerations, there's various considerations to be taken into account. Taxes, your total assets and liabilities. If you do have a house, if it is bonded, what's going to happen? Do you first of all need to sell that in order to have some cash, or is there maybe insurance to cover for that? So all of this relates to a proper financial plan. So the issue about wills and why is it so much important of an estate planning is that by having a properly and a valid will, at least you can have and make sure that your wishes will be adhered to. If you don't have a will, you will die what they call intestate. And that just means that if you don't have a proper will or have a valid will, in South Africa, it is all in terms of the Interstate Succession Act. And that's in terms of the law. There's not much you can do about it. So or at least, again, the best we can have is to have a proper and a valid will. So just quickly, who can make a will? Everybody that's 16 years old. So your children can actually make also a will. But the requirement is that 16 years and that you must be in a mental capacity in order to ascertain and be mindful of what you are putting into your will. Pardon me. So the requirements is just from the legal point of view, it must be signed by the testator, in other words, the person that's making the will, in the presence of witnesses. It must be signed at the bottom of each page, And then also the witnesses must be competent witnesses. In other words, they must be able to testify in a court of law to say that, they were actually present when that will was signed. I'm just going to quickly deal with interstate succession. And the only reason why, as I mentioned, is that should you don't have a will or that your will is invalid, it's in terms of this specific act, and there's specific rules. So the rules relates to your family and who can then inherit from you your will, your estate at the time. But there's certain problems with that. Just bearing in mind, first of all, is that it is now the law or the act that stipulates who will inherit from you. Whereas if you have a will, you can decide, I bequeath an asset to a specific heir or a legate, whereby in terms of interstate succession, that's not possible. So at least you still have that opportunity to decide. And maybe when we talk about your investments in Seychelles, we will come back to this point again. The issue about an executor, if you have a will, you can appoint an executor in South Africa. A lot of attorneys, even accountants, offer the services for free for the opportunity to be the executor, and then they just charge the fee as an executor. But if you don't have a will, the master will appoint somebody, and it can be anybody. And it's somebody that might not have your family at heart, or even take into account your assets that you worked hard for. Also, the issue about, Justin, there was just one other thing. If you don't have any, the last one there, if you don't have any relatives, the money will be placed in the Guardian's Fund. It will stay there for 30 years, whereafter it will be declared to the state. So effectively, what you've worked for, you will lose. But fortunately and hopefully, everybody will have a will, or at least speak to somebody to get a will. So we've talked about estate taxes. Again, let's just run through that again. There's different, let's call it, way that it's been called. In South Africa, we call it estate duty. UK, it's inheritance tax. The US calls it estate. And collectively, we can refer to this as citus taxes. And it's just the Latin for position. So in other words, it's where the asset is located. So whether it's a immovable property, located in the US, or you have shares listed in MERJ, that asset, where that is located, that is what is referred to as the citus or the citus tax that is applicable to that. And that's where it's coming from. So again, just on the issue of wills, from a South African perspective, I think there's three options for you. You can have a single will that applies to your worldwide estate. In other words, it includes your South African assets as well as your international investments. Justin, you're a bit quick for me there. Or you can have separate wills, whereby you will have a will that's dealing with your South African assets, and a will separately dealing with your assets in the US and separately in Seychelles, and if you have assets in Mauritius or whatever the case may be. Or three, it's a combination of that. But effectively, it boils down to you will have an option of having one will and deals with your worldwide assets, or if you will have separate wills dealing with your individual assets. Thank you, Justin. So just then turning to the Seychelles, first of all, there's no inheritance tax or estate duties, as I said previously, in Seychelles. From an inheritance law, the Seychelles courts and the Seychelles law accepts that where you are domiciled, in other words, where you stay, if you have a valid will under that jurisdiction, they will then accept that for purposes of Seychelles law. And we've talked about, Justin, if you can just maybe proceed again. We've talked about having a Seychelles will. It's been almost a contentious issue to the extent that we've been saying that it is a requirement. And yes, the global practice remains that you can have a will for each jurisdiction in order to make sure that those assets are dealt with accordingly. We've picked up that there was some lack of service, no support from some of the service providers, but also bearing in mind the cost of having an offshore will, in the sense that it can range from $500, that was quoted initially, $500, up to as much as $2,750 just to get a valid will. So as an alternative, the suggestion and what I'm trying to explain is that you can still have a valid will in South Africa. Your will then appoint your executor, and once that executor has been appointed and approved by the master of the High Court in South Africa, that executor then takes control of your estate, and that executor can then give effect to whatever you've decided in your will. If the executor, however, then decides to liquidate some of your shares, which is listed on MERJ, they can give that instruction through to PKF Capital, and that shares can be sold. Even if you want to bequeath it to your daughter, it will be a share transfer, and the executor can deal directly with PKF in that regard. So it's not contradicting what we've said before. I just wanted to confirm the point by saying that from a South African or from a tax perspective, you are taxed on your worldwide assets, and there's an obligation on your executor in any event to make sure that all your assets are taken into account. So from my point of view, I just wanted to stress the fact that you can have a valid will in South Africa. There's a question from Mr. Manu Wepu asking, can you have it in the Isle of Man? Sure, you can, as far and as long as it is a valid will and you are dealing with your assets in terms of a valid will, that should be fine. Thank you, Justin.
Thank you very much, Jakes. And I hope that has answered many of your questions. Certainly, the final point that Jakes made about that PKF will accept an instruction from your executor. I think that has been clarified nicely now. But I think that the real value today will come out of answering your questions directly. And we're going to just kick off by firing a couple of the questions. And I have obviously deleted the full name of any of the people asking the question, but left their name here so that we can address them directly. Louw, will you kick off with some of these questions here? I don't know if I should read. Yeah, let me start off by reading them out. In which countries do I need a will of any of my investments in WM or OrbVest? Currently, these properties are in US, UK, and Australia. Now, I know that we don't deal with any of those countries. I would like more info about that connection, please.
Thank you, Justin. Yeah, firstly, I think Jake just mentioned any investment in the Seychelles, you can have a local will that can deal with your worldwide assets. With the added issue with the US and UK is the CITES tax that they apply. So it might be worthwhile having a proper will in the US or UK if you've got an asset there. The investments that we have is via structure, so you don't have direct investments in that country.
Thanks, Louw. Do I need to mention any of my investments with OrbVest or WM in my South African will?
Well, depending how big the penalty will be, but ultimately you're going to pay tax on your worldwide income, so you need to disclose it. Depending how you took out the money, but if it's in your personal name, your liquid or your executor needs to extra or get the money back, sell it. So you need to mention it somewhere. Otherwise, you will be interstate in that country, and then it will follow the rules the same as in South Africa.
What are the usual tax implications on my debt, assuming we're talking about the OrbVest assets?
Yeah, and again, it's nothing different than any estate. So obviously, each person's circumstances differ. What will happen? This asset or your investment in OrbVest will be added to your local assets, and you'll be taxed accordingly. Now, obviously, if you do tax planning, you can, even if it's not even paid out, but if you say that my investments need to go to somebody else, it will still be accounted for in your will, and you still be taxed on that. But it doesn't need to be sold. I think that's the advantage, and there's no cost if you want to transfer it to a beneficiary. There's no cost involved in the Seychelles.
Thanks. Can I leave my investments to an NPO foundation or a South African trust?
Yeah, you're welcome. Yeah, that's up to you. Again, it needs to be a valid will, and the executor needs to act according to your wishes.
Are capital gains from selling a building also paid out as a dividend at the end?
Now, there's two aspects here. Obviously, an investment in investor that invests directly in the US, there is capital gain and it will be taxed accordingly. An investor that is by the Seychelles, we pay the taxes as in the example that I used, medical 33, the company pays taxes in the US. What you get in the Seychelles is only a dividend. So you'll get your quarterly distributions is a dividend. You'll get at end when we sell the building, you get a final dividend, and your capital that will be returned will be a liquidation dividend. So effectively, there's no tax on a liquidation dividend. So there's no capital gains tax for you as an individual going by the Seychelles.
Thanks. Is OrbVest considering teaming up with a South African company that can give advice?
Yeah, so to extent we've got Justin from an advice perspective, but ultimately we've been around this now a couple of times. Most of our investors have got their own financial advisors. If we introduce them to a new financial advisor, they usually want to know everything and they want to take over their client's asset base. And we haven't been successful in doing it, and I doubt if we will do it going forward. We might do it internally in the near future to offer that advice, but I doubt if we will identify a single partner to take us forward.
Thanks. Jakes, a few questions for you, if you're ready. Can I submit a letter of wishes to transfer my funds to a partner on our passing? Some of these guys will be repeated, but I think it's important that we just answer them just to reaffirm the answer.
Yeah, so again, in the context of a letter of wishes, the prerequisite is a valid will, whereby you have an executor that would look after your interests. If you don't have a valid will, I'm concerned that that letter is not going to be worth much, unfortunately. So again, just talking in the context of transfers and or bequeathing an estate or an asset to somebody specifically, there's ways of dealing with that in your will. You can either do it globally by saying, I bequeath my whole estate upon my death to my wife. Then everything, lock, stock, and barrel will go to your wife or person X or person Y. Then that is all that you need to say, unless you do want to decide to say, I have something specifically that I would like to bequeath to maybe one or two or three, doesn't matter, persons. I would like to inherit a specific item, for argument's sake, valuable hunting rifle or your investments in Seychelles. You can specifically deal with that in your estate. So it is ways of dealing that. But again, I think it comes down to your own personal circumstances and being in a position of having independent advice as far as that is concerned. What are the estate taxes on my investment if I pass while still in my investment? So first of all, I assume what you are saying is that your investment, say for argument's sake in medical 23 or 34, whatever the case may be from an OrbVest perspective, is that is an asset in your estate now. So again, it comes down to what you decided in your will and what instructions you gave to your executor by means of your will to say, liquidate my assets, or you can say, you know what, please don't liquidate, have the term of the investment, and then we can reinvest. But that is part of the way to deal with it in your will or with your letter. But again, if you know who's your executor, you can have him as part of your planning and being able to assist you with executing on that. So the estate taxes is then, from a South African perspective, you are being taxed on your estate, the value of your estate. You get a primary deduction of 3.5 million Rand, and the balance you are paid 20% taxes on it. And that's how you are taxed. So even if it is an investment in Seychelles, it will form part of your estate and you will be taxed upon it. So again, financial planning, take into account, is there enough liquidity in your estate in order to make revision and in order to pay the taxes that is due. 3, if I state in my will that my spouse, takes over and I still be liable to taxes, you should not be liable to taxes. There would be also, as Louw mentioned previously, if it is in terms of your will, there is no taxes, and there is also no duties or fees payable to PKF in order to transfer those shares to your wife. Do my investments need to be by net? No, it's not a prerequisite. As I said previously, again, it depends on your own financial situation. With all due respect, if you invest $1,000 at a time, it might not be worth your while to have a complicated or an expensive investment structure that's costing you a lot of money. But if you are investing at $100,000 at a time and you are planning to do that over a period of time, there's other advantages of just having an investment structure. And again, that's why Justin Porteous is on the call. The previous question of the specific investor was, is there other firms or companies that can assist with that? And typically that's what Justin can do for you. So I would seriously advise or suggest at least that you speak to him, get his input and make an informed decision as to whether you should hold it in your personal capacity or through an investment entity. Thank you, Justin.
Thanks, Jakes. Just to clarify, you cannot make an investment from your South African company, trust or structure. You have to offshore the money first, and then you have to make that investment in your own name unless you can put those funds into a structure. I think just to clarify that question. Thank you very much, Jakes. And Hanneke, welcome to the call. And we've got a whole bunch of questions for you. And so let's get straight into it. I'm going to just read them to you if you're happy for me to do that. I have a holding company that owns shares in another company. Dividends from this investment are earned dividend tax-free, so I have 20% more to invest. Do you recommend investing in an OrbVest building in this structure, or rather pay the 20% dividend tax to get the money in my personal name to invest to guard against South Africans' potential expropriation of property that may be expanded in the future?
I think for any wealthy South African person, most of them are looking to invest offshore. So obviously you need to make sure that you've got enough capital to look after your South African businesses. But any additional funds or investments that you want to make, the recommendation is to invest it offshore.
Thanks. How much tax will I pay on my dividends earned in my personal name in South Africa, and what is the calculation exactly?
So you'll receive the dividends through the Seychelles listed holding structure. They will deduct the withholding tax, and then in South Africa it will be exempt income, but bearing in mind that they've already withheld the withholding tax, and that was that calculation that Louw showed earlier. So your maximum is 20%. So the range is from 0 to 20%.
And tax implications for a company?
So I assume the question is from a South African perspective. So obviously, if we want to make any direct investments from a South African company, you need to get Reserve Bank approval. So that's quite a tough process. So I agree with the earlier comment to apply for your tax clearance, and then take the money out and then invest it. If we're talking about maybe you've set up a company in the Seychelles, obviously in the Seychelles, if it's an IBC, there's no tax implications for those companies.
Great. Yeah, just to clarify, there are only certain circumstances you can take money out in your company. It's not just a matter of making an application.
No, it's quite a hard process. So there's going to be a number of letters between that company and the Reserve Bank. So yeah, that process does take a long time to complete. Yeah, so the easier option is definitely to take it out in your personal capacity. By the time you complete the processes, maybe the investment won't even be available anymore.
Come in, Louw.
Just also to take into account the loop structure. So if you invest money into the Seychelles and bring the money back again, it also suits the loop structure. That might also be a problem.
What country and how much inheritance tax is paid if investments are in my personal name? I think we've already covered that, but clarify there, please, Hanneke.
So yeah, so obviously the countries where it is the best is these countries where there's low tax rates. Like Seychelles, there's very little tax in that country. Yes, so yeah, I would recommend one of those countries. Yes.
What documents do I need from OrbVest, and how do I submit my tax returns?
So if we talk about tax returns from a South African perspective, obviously you must submit provisional tax returns. That is then twice a year, and then once a year you submit an income tax return, and in those returns you need to declare all your worldwide income. From an OrbVest perspective, they will obviously give you documents on dividends that you've received. And so that is the information that need to be included.
Just a note, on our website, on the dashboard, Hanneke, there is a tab that you can download a report of all of your dividend payments that you've received during any period of time. You can do it monthly or over your tax period. And I think that Justin Porteous, if you don't mind just clarifying, I think you guys also will provide a form, a tax form based on your income over the tax period. Let's move on to the next one. If my investments are offshore but funded from South Africa, then it forms part of my estate. The question is, reinvestments made from dividends which are paid out from an offshore investment into my wallet, is this then also seen as South African money?
So if you evaluate your estate from South African perspective and you haven't structured any of your investments into other vehicles, you get taxed on your worldwide income. So any dividends that you receive will form part of your worldwide assets and then would be taxed in South Africa.
Hanneke, thanks a lot. I'm sure we'll get some more questions. By the way, there is a Q&A option on the Zoom webinar, and please shoot any questions that you have in mind. I see there are 7 already there. We'll jump onto those shortly. But in the meantime, Todd, welcome. I think you're in Orlando today, are you?
Yes, I am. Yep. It's pretty warm here.
Excellent. So the first question for you is, will OrbVest buildings be taxed in America, or is there a double tax agreement? And perhaps I should just clarify, Todd predominantly is involved with doing the accounting for the LLC companies, those that invest directly into the US, who are either accredited US investors or the entity that they're investing through is an accredited US investor. So that some of these answers may get a little confusing, but Todd, if you can just differentiate.
Sure. Okay, yeah, the question of whether it's taxed in America. If you have an LLC or you're registered to pay tax in America, there is a double taxation agreement with South Africa, but real estate is taxed in the country of origin of where the funds are sourced from. So the taxes will be paid here. Only at the end on capital gains. Any distributions that occur throughout the life of the project are not taxable. They're a return of capital. So yeah, that should answer that.
What about estate tax? Will one be taxed in America on the investment?
Okay, if you are invested through an LLC into the investment, into the building, you will be taxed here. And the as Louw had mentioned earlier, the exemption from estate tax is only $60,000. So every dollar above the 60,000 will be taxed here at an effective rate of about 40%. So that's something that you have to keep in mind. If you're invested through Seychelles, there's no inheritance tax here.
Please explain the proposed new tax regulations that are being introduced under the Biden administration.
Okay, there's a lot of provisions that Biden is proposing. We don't know which are going to go through at this point, but there's and a lot of them don't affect South African investors. So I'm just going to go through the ones that could affect any investors coming from South Africa. The first thing is they plan to increase the funding for tax enforcement and audits. So we're expecting that they are going to audit individuals and companies more often than they have been in the past. They have a lot of tax credits that affect only Americans, but they are going to change the tax on capital gains and dividends, but it's only on the amounts over $1 million. So it's really focused on, you know, very wealthy people that earn more than $1 million. And so most South African investors that we work with aren't into that category. And so the capital gains rate will stay the same for individual investors. The next one is the upon death, the inheritance tax is changing for American investors. Again, that doesn't affect South African investors because the tax rate, the exemption for South African investors is still only 60,000, and everything's still taxed there. I'm covering all of them just because you may have heard of laws and you're wondering whether they're going to affect you or not. The one that could have an effect is 1031 exchanges. 1031 exchanges are where you're allowed to take the profits of one property and reinvest them in a higher valued property and not pay taxes on the gains. The Biden proposals are talking about limiting that gain to $500,000. So that would have a significant effect on any OrbVest investments, where they're investing, you know, multi-million dollar deals, where they're 10 million or above, and the profits are in the millions. They can no longer make those 1031 exchanges and defer gains. So we have not witnessed that many 1031 exchanges, but that could have an effect for people that are trying to you know, avoid taxes or defer them into the future. The biggest effect for OrbVest investors in the Seychelles would be the increase of corporate income tax rates. Everything that we have been working together as far as the models go have been using a tax rate of 21% for corporate income tax rates. The Biden proposals are proposing to increase that from 21% to 28%. So it's a 7% increase in corporate income taxes. So that will certainly affect the returns on companies going through Seychelles versus investing directly. And then on the last thing is they're planning on increasing the corporate tax enforcement or audits as well. So that's in a nutshell what we're looking at. We still don't know what's going to happen. Nothing has passed through yet.
That's very valuable. Thanks, Todd. Why does it take so long to wrap up? I suppose we are going to be closing out a couple of investments in the next year or so. And it does feel like it takes a long time to get the final payout. And specifically, we're talking about Medical 5. Can you explain that process and why it takes so long?
Yeah, there's a lot of wheels and a lot of moving parts to these investments. I mean, the biggest part is when you're selling a building, there's a lot of unknown factors and payables and everything that, you know, cash flows where all the debt has to be paid, all the potential debt has to be located and make sure that everything is completely cleared out. So that can take a few months. And once that is done, and that part is done by the sponsor, they pass it on to their CPA firm. Depending on what time of year that goes to that CPA firm, you could be, I mean, if they do it in the middle of tax season, which is from January to April, the CPA firm is not, they don't have the ability to turn that around that quickly at that time of year. Same with the August through October time of year. That's when CPA firms get very busy. So that can slow down the process. Then they issue a K1, and then there's multiple entities that flow down into the final entity, and we have to prepare the tax return at each level, get approvals from all parties, and then send it to the next level, get approval from all parties, and then go to the final distribution. There's also, when we're dealing with the Seychelles limited companies, one of the ways to minimize taxes is to have a liquidating dividend. That means that you have to wait until the end of the project to liquidate, and everything has to be done at that point. So that's another delay, but you have to make sure that everything is done, that all the tax liabilities are paid, that all the governments are comfortable with what they're receiving, and then you can make that final distribution.
Fantastic, Todd. I think that was very valuable, much appreciated. Last but not least, Justin Porteous from PKF Capital Seychelles. Justin, do you want to come in there? I'm going to fire the first question.
Thanks.
We're coming in at 58 minutes. I'm sure we can go over. I see that we've got 76 people online, so no one is logging off yet. Let's fire away. What investment amount would warrant an insurance wrapper?
Tough to say, Justin, exactly, but we generally work at around $250,000 in terms of the costs that you're going to incur with the wrapper versus the cost that you're going to pay for having the investment in your own name. So that's a figure that we look around. It really depends on your inheritance planning, the age of the individual, what they're really looking at benefiting out of the structure.
And maybe you can just explain briefly what the different type of structures are that are available to potential clients.
Cool. So the insurance wrapper that we generally work with is effectively a 99-year endowment plan. So what an individual will do, instead of putting their money directly into an investment, they would set up an insurance product, a policy, and they would actually insure the funds, let's just say, for argument's sake, $100. So they would purchase $100 worth of OrbVest shares and insure those into their wrapper, and that would then be effectively wrapped for that 99-year plan. So that's really, really great for generational planning. So if you want to put your assets forward for 1 or 2 generations, depending on the life of your ancestors, and at the end of that term, then those investments would be paid out and mature at the end of the wrapper term. Obviously, there's different ways we can structure it, and it can become quite a bespoke entity, which involves companies and all the rest of it. But that's a general space. It's for intergenerational wealth planning, and to make sure that you aren't getting leakage along the way as your assets are passed on.
And insurance wrappers, there has been a lot of talk about clamping down on them. What is actually really happening, and what will the implications be?
Well, it depends on which jurisdiction you're looking at. That's probably a question from looking at South Africa particularly. So if we go back a couple of years, the first real push into insurance wrappers from a South African context was done through Sanlam and Old Mutual. And basically what happened there is again, when you go into a wrapper, the ownership of the assets effectively changed from the owner to the insurance company, hence the wording of it being wrapped. So what was happening, I think in 2014, it changed from a SARS perspective, but basically because Sanlam and Old Mutual were wrapping assets that were South African assets taken offshore by Sanlam and Old Mutual, and then effectively externalized, but put into a wrapper that was based in either the Isle of Man or Guernsey, then those assets were held for 5, 10, or 15 years in a type of endowment wrap. And basically, originally, those were effectively grown tax-free. But SARS looked at this and said, because the holding company is in South Africa and it's South African assets that they are externalizing, they'll actually tax them on those assets held within that wrapper. So it's very much a South African problem, if you want to call it that, involved in companies that are, the holding company is from South Africa. So the wrapper that we're talking about here has actually got nothing to do with South Africa. PKF Capital Markets manage that through the Seychelles. So it's effectively that someone takes their assets outside of South Africa by exchange controls, or they're already assets outside. And then they would put them into a Seychelles-based insurance company and wrap them there. So, you know, on the tax that happens within that company, it's got nothing to do with SARS. So it is wrapped completely outside of their holdings during the time of the endowment.
Useful, thanks. So just to reiterate, that's $250,000 is kind of the rough parameter you need to have that sort of money invested to make it worth your while. Otherwise, it's better to be invested in your personal name.
Yeah, somewhere around there.
Perfect. Jakes did speak a bit earlier on about best practices to have a will in the Seychelles, but I think there is some frustration around the cost and the service providers that are on the island. This is quite a harsh one for you, but PKF advised me I need a will in the Seychelles. They've been unresponsive, have not answered my questions, and are referring me to a local lawyer in the Seychelles. He has also not given me any feedback. Do you want to just talk a little bit about that?
Yeah, so I understand the frustration. It's been hugely a frustration myself as well. So we were requested by a few clients, both of OrbVest and some other clients out of South Africa and other jurisdictions, to try and facilitate a will for them in the Seychelles. Obviously, with us having a presence there, they assumed we could do it easier. We did consult a bunch of attorneys, and as Jakes alluded to, the price can be quite exorbitant at sort of about $2,500. That's to set up the will. There afterwards, a lot of those attorneys will charge about $500 per annum for safekeeping and to maintain it. So when you convert that into something like a Rand-based space, it seems exorbitant. So we did a bit of searching, and we managed to find an attorney that offered us a better deal at $500 set up and then $50 per annum. And it's a bit of one of those things that you get what you pay for. So he was inundated with wills, and just basically what we hear, he just wasn't giving anyone feedback or anything. So we've tried to look for someone to give a similar deal, but effectively we just can't find it. I mean, the best we've got is $1,500 to start and $500 thereafter. So yeah, the legal advice that we've gone and consulted on is that, as Jake said, we would act on a South African executor. So the real benefit of having a foreign will is if there's any conflict on the will in South Africa, it might fall to the Seychelles authorities, and then the Seychelles courts would take over that. And then Seychelles falls under French law, where they basically pass it on equally to all your children, or the inheritance of who you've got beneath you. So that's the one thing. The other thing is really it would speed up the process if the executive of the state gets hold of us and we say, well, look, we've already got a will. It's just to pass the assets from this person to that person, and we all just action that accordingly to the will. Obviously, this does not happen without the executive of your state being involved in any case, because those assets may need to be sold in order to pay estate duties. So we can't do anything until we've actually consulted the executive of your state within South Africa. So yeah, in a nutshell, it's been hard work and too much frustration for myself and for clients and for everyone else. So I have tried to steer people away from wanting a will, but if they do want it, I can put them in touch with an attorney that will sort them out, but at a cost.
Thanks. And then final one for you. PKF obviously are tightening up a lot on the KYC AML process. I think a lot of existing investors are being asked to re-KYC, and certainly there are a bunch of additional disclaimers and documents you need to sign off before you get your KYC approved. Can you talk a little bit to that?
Yeah, so firstly, just to say, it's not something that we like to do. I think often we go to investors and say we need to redo this or need a newer document here, and they think we're just doing it because we're bored, but it's really not the case. KYC is a problem around the globe. The OECD and FATCA have really been pushing everyone to be more thorough with their KYC. So as you say, Seychelles is a jurisdiction which, because of its low tax rates, always comes under scrutinization. And so we're trying to, uphold to the most stringent levels. The reason for re-KYCing is, in South Africa, we have a passport that expires every 10 years. We have an ID book that never expires. So For instance, I've still got my original ID book I got when I was 16 years old, so I don't look nearly as handsome as that anymore, but that can be used throughout South Africa. Now, it's a bit ludicrous when you're in your 80s and you've got a 16-year-old passport and you're trying to say, well, this is me. You won't look anything alike. So the law has changed, and what we've been told as OECD is basically instructed is to look at the 10-year expiry on identification. So if your ID is older than 10 years, then we ask for another form of identification. And obviously identification has to be certified. We are changing our systems, and we've basically trying to be a bit more new age. So now we've just implemented ourselves that we can do it over Zoom. So, or for instance, I'm in Cape Town. If someone's really can't get someone to certify their passport, I can meet them and see them, and they can hold it up to me, and I can say, fine, we approve you from a KYC perspective. But yeah, generally it's not a hugely difficult thing if you're an individual. It's just an updated ID document that's certified, as well as a proof of address, which is a government parastatal issued utility bill or a bank account that has your address on it or something of the like. So it's not, and then we ask for a due diligence form where you agree that you're not a politically exposed person, the normal stuff.
Great. I'm going to move on to the Q&A. We've got a number of them backing up here, but one specifically for you. Jean asks, are tax certificates issued annually by you? So can we notify SARS of the dividends earned?
Not tax certificates, because we're obviously not a South African entity, but we do, you can get a statement which shows what you've earned. Now, I saw one of the questions came up either on that Q&A or earlier that says, if I've received money into my wallet, do I then pay tax on that? And effectively, yes. The exchange is not a structure. So if you paid a dividend out of Medical 26 and that money is paid onto your wallet, therefore it has been paid to you, and you would then pay dividends tax on that. And even if you are going to reinvest it into the next medical suite that becomes available. So that is the way that it should be acted on. And so you can request a statement, or you can draw a statement from the portfolio that will show you all your earnings, and then you can just use those earnings to say, I've received X amount of dividends, and then that would effectively be what you'd need to pay tax on.
Great. I'm going to move it around a bit, but one from Francois here. Francois, I'm not sure if you're looking for a South African will or a Seychelles will, but obviously if you're looking for a Seychelles will, Justin's contact details are on the bottom of the slide. If it's a South African will, let's bring you in, Hanneke, and then I'll pop some questions to you while you're online.
In terms of the South African will, we obviously have firm as audit, tax, advisory, corporate finance. We do a number of different services, so we can assist with a South African will if that's required.
And I assume you don't charge for the drafting; you charge the executive fee.
That's where all of us make the money. Also on the executive fee. That's why all banks have got their own estate departments, because I understand the amount of money they can make out of it. So we normally charge a percentage lower than the banks, because we think 3.5% is a bit excessive on a big will. So we do look at what is the actual time that is involved.
This might not be for you, but Manu asks, what would the tax implications be if I transfer my MERJ shares from my personal into a registered entity? In other words, that's quite a good question, actually. Someone that would now like to move from their personal name, set up an entity and move it across. That might be a more complicated question for you, Justin. I guess that's more of a PKF charge, isn't it? There's the transfer cost. Or you, Louw. Do you want to grab it, Justin?
Yeah, I'm happy to grab that. So generally, if you do an on-market transfer, so you buy and sell on market, in other words, there's a flow of cash via MERJ, there is a fee that MERJ charge, which is 0.75% on the buyer and the seller. If it is what we would call an off-market transfer, for instance, I set up my own company in the Seychelles and I want to transfer the assets from myself to the company. If I am the ultimate beneficial owner of that company, then there's no charge. But if it's a company owned by a structure of of some nature, then there is a charge of 2.5% on that. So basically 1.25% on either side. In terms of, from a tax perspective, if you're putting the money in, it really just depends what the structure is. So if it's a company and you're getting shares for your removal of the structure, well, then you would, you're buying the shares of the company for your OrbVest investment. If it's insurance wrapper, then you're actually insuring those assets. So that's fine. There's no tax on that. If it's going into a trust, then obviously you're putting those assets into trust, then you're either donating them in and you're paying donations tax, or you're loaning them in and then you've got to pay tax on the interest. So it really depends on how the individual is doing it themselves.
Yeah, so then the second question here is, if I move my shares, transfer assets on MERJ from my personal name to my South African entity, well, I think that you can't do because it's a South African entity, it's a South African structure.
Yeah.
Nico?
But Justin, if there will be potential capital gains tax if you move shares from your personal name into a structure, because in your personal capacity is taxed on worldwide assets and worldwide income. So there is a potential capital gains tax effect to be considered.
Great, thanks. Jakes, if you want to come in, there's a few more will questions here. Is a South African will valid in the Seychelles? I think we kind of answered that, Monica.
Yeah, definitely, yes. That's not a problem.
And if so, what would be the best way to have one registered here or registered there? I guess if you have a South African will, do you have to have it registered there? Probably not.
No, you don't have to register it there. As long as I said, it's valid and it's probably drafted and things like that. But you don't have to register it there. No, that's not the requirement. Similarly, as I said previously, even if you do have a will in the UK, as long as it is a valid will and somebody is validly appointed to act as an executor or somebody that's the caretaker in terms of that will, PKF will accommodate that situation.
Yeah, and I think, again, it depends a lot on where your tax domicile is, because you can't just have a will from the UK for your Seychelles assets if you're
Yeah.
South Africa.
Yeah, no, that doesn't make sense. CITES tax, that's the issue, where the assets are situated or where you are personally domiciled. Those are the two ways of looking at taxes.
Again, an added question about the wills. Should I have a single will in South Africa or separate wills in different countries where my assets are located? Jakes, just repeat that one if you don't mind.
Yeah, so again, what we always say, best practice is that you will have a will for each jurisdiction. So you will have a will for your South African assets and you will have a will for your Seychelles assets. But if it is too expensive and or that you don't want to incur those costs, as long as you have a valid will in South Africa, it should be fine. That your local South African will can also deal with your investments in Seychelles. But again, you don't have to nominate or deal with it specifically, my medical 28, 29, 20, whatever the case may be, shares. As long as there's an asset in your estate, you can bequeath that asset as if it is a boat or a gun or a property. But if you do want to deal with it specifically, you can as well. But that's part of your discussion with your financial advisor or your accountant, as Heniku proposed to do.
Okay. Louw, Anonymous here asks, and I think, again, there's some confusion here. Earlier in the call, it was mentioned that there is a withholding tax that can be deducted off the dividends received in the Seychelles. Was that correct?
No, the withholding tax are paid in the US. There's no withholding tax or DTA between the US and the Seychelles. So the taxes are paid in the US, that's gone. And if you invest in the Seychelles, obviously you account for your worldwide income. So there is no withholding. If you're a South African investor, however, investing straight into the US, there's a double taxation agreement and there might be set-offs. But that is if you invest directly into the US via an LLC. So a different investment method at all.
Yeah, and a second one from Anonymous. Louw, I'll just stick with you, although this is a bit of a tax one. So regarding dividends earned, we're allowed to take out a certain amount of ZAR per annum. The dividends are now paid in a foreign currency account, in other words, into the wallet or the PKF account. If I have the dividends of a 2021 investment paid into a foreign currency account located offshore, and then make a future investment from this foreign currency account, does it count towards the annual limit for the year?
That's already taken out. So your foreign allowance is what you take out, and you're allowed to take out. What you do with that money is up to you. Obviously, you still need to declare your assets in the foreign countries, and that's what SARS are clamping down at the moment. As investors doesn't account for the full asset base around the world, and specifically linked to the profits that they've made on those assets. So they declare the first one, but nothing after the fact. Again, what Eric also mentioned, we tax on a worldwide income. That is different from the forex allowance that you have.
Great, thanks. I see we also have some additional questions on the chat. We are running out of time. I'm very mindful of that. I think perhaps we are heading for, maybe we just go until the end of the half hour. We still have 67 people online, so let's see if we can get through a few more of these. I have Anonymous. I have 3 beneficiaries in my will. For 2 of these, a specific amount is mentioned. The rest all goes to one person. Do I have to specifically specify that OrbVest investment has to be transferred to the main person, or is it sufficient to cover the remainder of the estate generally? Jakes?
Yeah, no, it's not necessary. Again, if it is part of your total estate, then you can just bequeath the whole balance, which will include that. Maybe we can circle back to the question earlier about a letter of wishes. So if you do have then specifically a letter, you can allude it to that and you can explain it to your executor and he or she can assist you with that. But generally speaking, if your estate says the balance of my estate I bequeath to person X, that will then include whatever is left.
Great. Hilditch, I'm going to just reword this question a little bit. Are there any other advantages in having a Seychelles will? And I guess this is a tax question. In other words, if you have a Seychelles will, can you then protect your assets and not have them wound up in South Africa? Who wants to give that a bash? Hanneke?
Well, from a South African perspective, you're taxed on a worldwide basis. So if you die, they're gonna tax you on your worldwide assets. So the best way to get around that is to build a structure. In Seychelles, you don't only have to have listed investments, you can also have unlisted assets. So that structure that Justin builds, you can also use it for other investments, or even to trade out of one of the companies.
Great, thanks.
Just to jump in there, Justin, I think the biggest thing, or a lot of these questions asking about wills and what they should specify and not specify, the big thing is the more specific your will is, whether it's a South African will or you have a will in every jurisdiction where you have assets, the more detailed it is, the quicker things will be wound up. So EY, I mentioned that in the thing I wrote, EY did a study 3 years ago on wills in South Africa and how long it takes for estates to be wound up, and the general estate or the average estate takes between 1 and 2 years. Now, I assume the average estate has mainly assets locally, but so if you're looking at people that have assets throughout the globe, the more detail your will is to say, I have assets with OrbVest listed in the Seychelles, and I have medical 25, 26, 27, and I want 25 to go to my son and 26 to go to my daughter, etc. It makes it a lot easier for the executive of that estate to actually get hold of those assets, get in touch with the individuals doing that, and then sort of work it out. Whereas if it just says all my assets go to my kids, then they've got to go and find all those assets throughout the globe, which sometimes can be difficult. So for a lot of people that I've spoken to, the big issue is when they pass on, they want the assets to pass on as quickly as possible. So that's where there may be advantages to having a will in the Seychelles in this instance, or in the jurisdiction of your assets, because things will happen a lot quicker. But if that's not a huge issue, then having a will that's just detailed in South Africa will be as good as one can get without having lots of costs involved.
Great. I think we've covered some of the other questions here. I'm just looking through. There are obviously some that are already covered. So I'm going to move to Pierre. And while you're online there, Justin, final question is, will we still receive an annual statement from PKF for the 2021 tax year? And I think I did say that at any stage you can download that, report. But it goes further, and he says that showing dividend income. And will the capital return be included in this dividend income? If so, how do we explain to our bookkeeper that these amounts are not part of the taxable dividend returns? In other words, if it's a return of capital. Now, I don't know if that's putting on a spot there, or if we have to move over to Louw, because this has obviously been discussed. Louw, do you want to perhaps give it a bash?
Yeah, so we spoke to PKF direct, so your dividend will be shown separate, your capital return or your liquidation dividend will be shown separate. So in the instance that there's a discrepancy, please give us a call and we will adjust it. I know some of the, I'm going to say, when they did the distributions, there might have been a misallocation, but yeah, we will sort it out if there's any issues. Just on the question, because PKF there's no tax there, they don't know when your tax deadline is. So they are dealing with multiple countries, and each one has got a different tax deadline. So if you need a tax form, just send it to support at PKF, and they will send you a document. Alternatively, just download it from the website.
Excellent. Thanks, guys. I think we'll cut off there. My apologies if I've missed your question or if it hasn't been answered since you did table it here. Again, thanks very much to Todd, Justin, Porteous, Haniko, and of course, Louw and Jakes. I hope that was helpful to you. Just a final note from the sales guy on the call. If you, we have had one or two. Oops, let me get the right screen here if you don't mind. We've had, we are very pleased to say that Fleming Island is all approved, and we are good to go to close. And of course, we do have something left in the investment. There's a couple $100,000 from one or two investors that are not going to make it to the close. So just if you are interested, we will be able to accept your investment there. I think that we need to have it all closed up by next Friday. So on that note, thank you very much and good night.
Thank you. Thank you.
Thank you.
Thanks.
Thank you.